Ladies and gentlemen, good day and welcome to Wonderla Holidays Limited Q1 FY24 results conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Adidev Chattopadhyay from ICICI Securities. Thank you and over to you, sir.
Yeah, good morning everyone. On behalf of ICICI Securities, I'd like to welcome everyone to the Wonderla Holidays Q1 FY24 results call. From the management, we have with us today Mr. Arun Chittilapilli, the Managing Director, and Mr. Arun Srinivasan, the DGM Finance and Accounts. I'd like to congratulate the company for posting yet another strong quarter. And now I'd like to hand it over to the management for their opening remarks. Thank you and over to you.
Hi, thank you so much for the introduction. Good morning everyone. Thank you for joining this phone call today. I extend a warm welcome to all of you to discuss our Q1 earnings. FY23 was a spectacular year for us. After enduring 2 challenging years, we've been able to achieve extraordinary results in the last year. Our footfall, revenue, PAT, EBITDA all have reached all-time highs in the last financial year itself. And we were hoping that the growth momentum would be continued. And we also have a lot of innovative rides, shows, and we're able to revolutionize the concept of entertainment that captured millions of visitors who came thronging to our park. All this dedication and strategic approach has established us one of the largest amusement park companies in the country. Our strategies in digital marketing have been remarkable and enabling us to reach our audience with relevant promotions and effective campaigns. We have done a lot of musical events, festivities, and occasions occasions to visit. And our endeavor is to create more occasions to visit Wonderla. During the quarter, we witnessed a footfall of 11.02 lakhs. We are now comparing post-COVID numbers, keeping base year as FY23. Bangalore Park saw a footfall of 4.69 lakh visitors. Kochi Park registered 3.19 and Hyderabad did 3.14. The ARPU for the quarter was 1,626 rupees, an increase of about 25% YOY. The increase in ARPU was driven by healthy growth in non-ticket revenue, along with encouraging response from walk-in groups and all aspects of our customer base. The construction of our 4th park in Odisha is in full swing and we are working hard to finish it on time. We will also be starting work on our construction of our 5th park in Chennai after receiving necessary approvals to start construction. We also have made some significant changes in our senior management and we are happy to announce the appointment of Dhiren Singh Chowdhury as Chief Operating Officer for the company. Dhiren brings with him 15 years of experience working in marketing and ops, and he was associated with companies like Zomato, Red Bull, etc. His experience, expertise, and insights in leadership will be instrumental in achieving our goals going forward. On behalf of Wonderla, I would like to extend a warm welcome to him. Now moving on to the financial performance for the quarter. Our revenue for the quarter stood at 185 crores, up by about 24% compared to last year. EBITDA for the quarter stood at 123 crores, up by 30% YOY. Our EBITDA margin stood at 64%, having improved by 260 basis points. PAT for the quarter was at 84.5 crores, a huge 31.2% growth. And the PAT margin is at 44%, highest it's ever been. As we continue to be debt-free and cash-rich, we ensure that our ability to make strategic investments and maintain high profitability. Looking at the future, we are excited about all the opportunities that are coming our way to set up new parks and to collaborate with other people, other business houses to set up parks. I think it's going to be a very rewarding journey with us. With this, I conclude my speech and I now open the forum for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on a great quarter, Mr. Chittilapilli. My first question is on your thought process behind ARPU versus if I look at the footfall growth, because in Bangalore you've shown us 11% footfall growth despite a 21% growth in your ARPUs, while in Kochi and Hyderabad the ARPU growth has impacted your footfall significantly. So do you believe that Bengaluru as a micro market is more resilient to price hikes, and you could take possibly another 20% price hike without impacting the footfall much? And when you talk about Kochi and Hyderabad, what's your strategy going to be here in terms of increasing your ARPU, or will the focus be on footfall?
See, I think one of the things that you all should remember is that we were already running full. If you remember my Concall from Q1 FY23, our parks are already running pretty much full. The only thing we could now do is to look at how we can maximize revenue potential from parks which are already running at capacity. Last year, because it was COVID, first year post-COVID, we had a unusually large size of group in all the parks actually, especially in Kochi. So one of the reasons why the footfall could have grown, de-grown in the other two parks is because we got a higher percentage of retail versus group footfall. But having said that, it's not really much of a worry for us because, post-COVID, we didn't expect all the parks to perform at the same level. Bangalore obviously is the biggest city in the most wealthiest, and, in terms of disposable income, I think continues to be the highest, and that's reflected here as well. And also, Bangalore has always been our most popular park. The footfalls are always higher than the other two parks. So that's because the brand is from there. So in a way that continues. I'm not really worried about footfall growth because even in spite of doing much higher ARPUs, 25% higher ARPUs this year, footfalls have not really de-grown. It's grown down by 1% as a company. So it's not really much of an issue for us.
Sure. That is helpful. Yeah. Please go ahead.
Yeah, that's it.
Sure. Second question is on your discussions. You've been having discussions with other state governments, including MP, Goa, Punjab, Gujarat. So how soon could these possibly materialize for the company?
I think one or two projects will be announced this year, this financial year. The rest, we want to do it, stage by stage, as and when we get favorable proposals from state governments, we will look at it and we will decide. As of now, we already have two parks in construction, so we are not very aggressive in getting new projects, but we also want to see we have a lot of interest from various state governments. So we are talking to many of them, and from time to time we'll announce.
Sure. Regarding the hiring of Mr. Dhiren Chaudhary as your COO, so could you highlight key initiatives he would be responsible for, and how do you intend to use his capabilities and experience to scale your business?
So he is somebody who's got a lot of expertise in business and improving yield and especially sales within the parks, and those kind of things we want to improve. A lot of efficiencies can be. And so in every sense, he will be a chief operating officer. He will work directly under me. He will also have a charge of P&L. He'll have a P&L focus, obviously, and operations. So these are the two things: operations of the parks and resort, and P&L focus is what he's going to broadly do. But it will evolve over time.
Sure. And my last question is on your resort business. So what are your plans on scaling up rooms and offerings at your Bengaluru resort? And are you also planning to add resorts at the other locations?
Yeah. We are actually in the process of finalizing plans to upgrade our resort. So we already done some work in this area. We've already upgraded our bar and restaurant. We have a new convention space. So But more and more refurbishments and upgrades are coming to the resort. And yes, we will be looking at building our next resort in Hyderabad, but it will not happen in this financial year. Maybe I think we will take it up next year.
Great. That's it from my side. Thank you and all the best.
Thanks.
Thank you. Next question is from the line of Kaustubh Pawaskar from Sharekhan by BNP Paribas. Please go ahead.
Yeah. Good morning, sir. Thanks for giving me the opportunity and congrats for a good set of numbers. My first question is on the non-ticketing revenues, which grew by around ARPU, which grew by around 26% for you. So just wanted to understand how much was the growth in ticketing revenues and how much was the growth in non-ticketing revenues?
Both have grown. I think the highest growth has come in non-ticket revenue, and ticket revenue has also grown up by about 18% compared to last year. But non-ticket revenue is also grown much more than that, more than 20%.
Okay. And the higher growth in the non-ticketing revenues is because of the initiatives what you have recently focused largely on the food, the
Correct.
various initiatives taken on the food part that is helping you to achieve good growth in the non-ticketing revenues?
Yes, correct.
Okay. And though this quarter we can understand it is because of the high base, the footfalls were, flat. But do you still believe that, 5 to 6% kind of a growth on annual basis in terms of footfalls is achievable considering, various initiatives you have in force in the coming quarters and, for the entire year, 5 to 6% kind of a average footfall growth is achievable?
Yeah, that's what we are aiming for. But having said that, this is the first normal year we are having after 2-3 years, right? So
right.
There will be some changes in people spending capacity. People are more busy. So, trips, things are getting back to normal in that sense. So because of that, I think there will be some differences compared to how it was last year. So hard to predict how it will be, but we are reasonably confident that we should be able to get at least 5% footfall growth.
Right. My third question is on the new, states where you are planning to come up with the, projects. So it will be in line with what you are having the park in Orissa, a smaller park where you will be having around 25 to 30 rides and, the model will be more on the lease based kind of a thing where you will be having the land from government on a lease basis and you will be putting capex behind only, setting up of the park. So it would be a similar model?
Yeah, it will be similar. It depends on the size of the market. So some markets we are also talking to, for example, Ahmedabad, Gujarat. So those will be larger investments. But in a smaller states like, smaller cities like Indore and maybe even Goa will be smaller investments. Yes.
Right. And one last one on the events, the Father's Day or some of the events which you have been launching into the park. What kind of incremental footfalls they are helping you to achieve? If you can help us understand on a particular day when there is a celebration, what kind of footfalls you are achieving or, from the capacity utilization.
Depends on the kind of initiatives. Some initiatives will have huge traction and create a lot of footfall. Some initiatives do not. That's why we need to keep doing different things. But overall, it definitely has a positive effect on our footfall and just the buzz in the market about the brand. We are always in the news. So there's always something happening. People like to, check out our website more and more. The number of people who are coming to our site has more than doubled in the last 2 years. More than doubled, I think it's tripled. So all that, so there is multiple reasons why we're doing that.
Right. And is it helping you for more in walk-ins or even groups are attracted towards this initiative?
Mostly walk-ins, but then walk-ins always has a ripple effect on groups also. So that's how it is.
Okay. Thank you. I will get back into that.
Thanks.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from line of Angad from Monarch Network. Please go ahead. Angan, may I request to unmute your line and go ahead with the question, please?
Am I audible now? Sorry. Congratulations on the good set of numbers, sir. I have 2-3 questions. First is you mentioned that you will announce 1 or 2 projects in this financial year regarding the other cities. Will these projects also be on the same line as the Bhubaneswar Park, or you will have a business strategy for that?
I just answered that question. Depending on the city, we will decide. So some of the larger cities, obviously, we will do a larger project. Smaller cities, we'll do a smaller project.
Sir, what is the split between the groups and walk-ins for the 3 parks for this quarter?
Arun, can you just, Arun Srinivasan, split of group and walk-in?
Yeah. So group and walk-in overall as a company, we have achieved 15:85 ratio.
Yeah, so that's a good ratio for Q1. I think last year it was, 22 and 88 or something.
23:77 last year.
23:77. Okay.
Yeah.
So that's the difference.
Sure. Sir. And what is the percentage of tickets that are booked via the online route, sir, for this quarter?
Online is roughly about 15 to 20% online.
Okay. Yeah. Other questions have been answered. That's it from my side. Thank you.
Thank you. Next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity and congrats to the whole team on good set of numbers. Arun, you spoke about Bangalore's resilience versus the other markets. So just wanted to see if you can share some insights. Is it largely the spending power which is higher, or are you reading any other trends also in this micro markets on the resilience?
See, Bangalore is the largest city in South India in terms of spending power. So definitely there is a difference between Bangalore and Hyderabad. Although the difference is not much, there is a difference. So and maybe that's why. And also for us, Bangalore is our home market, and it's always been the biggest, and we've been there as a brand the longest. Cochin is an exception. But we've had a different brand, and then it came Wonderla 10 years back and things like that. So there is a bit of So also spending power in Cochin tends to be more price sensitive, whereas Hyderabad and Bangalore are not so price sensitive. So I think every city is slightly different, and that's why you're seeing that.
Sure. And when you measure net promoter score of all the 3 parks, are they trending in same direction at the same rate, or there are some divergence there?
They're all almost the same. There's not much of a difference.
Okay. And lastly, you spoke about some 2 to 3 projects in this financial year. So just wanted to know what kind of investments are we making in our project team in terms of managing 2 to 3 projects at the same time, and then what kind of capacity we are building for future also. How many projects we can handle at one point of time?
So as we speak, we are recruiting a lot of people into our engineering and technology team. So we want to make it bigger, and right now we have the capacity to handle 2 projects simultaneously, and hoping that we can make that maybe 1 to 3 projects also at some point soon. But as of now, for the next 2 years, we will be until we finish Chennai and Bhubaneswar, we'll be focusing on those 2. Of course, we'll keep signing on new projects if we feel that it's advantageous for us to go there.
Okay, very clear. Thanks and all the best.
Thank you. Thank you.
Thank you. Next question is from the line of Devang Patel from Samisha Capital. Please go ahead.
Hi, sir. I wanted to understand what is the ticket price increases you've taken in Q1. Earlier, you'd mentioned 10-12% hike you'd already taken, and that would be reflected in Q1. But the ticket price is QOQ is much higher. And how much of this increase is because of the mix change?
So the Q1 will see the highest increase because we've increased our peak rates more than our normal rate. But Q2, obviously, our rate differential compared to last year will be slightly lower. But having said that, there will be at least between 15 and 20% growth overall for the remainder of the year. 15% at least.
Sir, and you mentioned walk-ins were 85% in Q1. Maybe Q1 last year is not comparable, but generally, what would have been the trend for walk-ins in Q1?
Yeah, walk-ins is highest in Q1. 87 is correct. That's how it always is. Last year is different. Yeah.
And have we taken any measures to discourage group bookings, or this is just in the normal course we've seen more walk-ins?
See, first year post-COVID, which is last summer, we were a little more relaxed on group discounts because we wanted more footfall, to build that momentum. This year, what we have done is we've removed some of those extra discounts which used to apply during the peak season. So discounts are lower during peak season.
And in this group bookings, would you have seen the absolute number of, let's say, school children still growing YOY because the overall footfalls are lower?
School children, it's hard to predict yet because the first quarter we don't get too many school kids. It's mostly college kids and corporate. Schools are closed in Q1, right? So we don't get too many school kids.
Okay. And, the parks are running full, as you mentioned earlier. Are we accelerating our expansion plans at these three parks?
So we are spending roughly 70 crores on maintenance capex for the existing three parks. We are adding at least 5-6 attractions to each park this year. So that's ongoing.
Is this included in the 70 crore capex that you mentioned?
Yes.
Okay. And you mentioned you will add one more, you sign up one more agreement this year. When would construction for that start?
I don't know. We can't predict right now, but I'm thinking that as soon as one of our new projects that we are doing currently, if that finishes, then we can look at the next one. Or maybe we could start earlier also. It just depends on the timing of it. As of now, I think we should be able to sign at least one more project, and then we will see. We'll take a call.
Okay. And Chennai particularly, you've got the approval in June. Will we be able to finish it within 2 years, or would we look at some partial?
Chennai is a project that we have already planned everything. A lot of the architecture, design, and all has already been. We just have to execute it. We were waiting for this crucial exemption to come through because we felt that it doesn't make sense for us to do it otherwise, and it just sets a bad precedent for other states. So that's why we've done it, and now we will start, and we should be able to finish it by June 2025.
Okay. Sir, and quickly, if you can update us, how many acres we are looking to take up in both Chennai and Odisha initially, and what capex is our latest estimate?
That we can't give you that information, but we will give something similar to our existing ratio.
Okay. Sir, and as we move to digital marketing, has our total A&P spends gone down over what we do normally?
No, A&P spends have not gone down. It's just more efficient at getting to people, and that's why you're seeing better numbers post-COVID compared to pre-COVID, because I think our marketing has become much more efficient. Also, we are doing many more things, so our advertising and marketing budget will not go down. It will continue as we will spend all that money, but because we want more and more footfalls, and we are trying to build our brand in new states, in new areas, and things like that. Yeah.
Okay. And our other expenses have grown and kept pace with our top line. So is this to with more subcontracting, or what would you ascribe the growth to?
Yeah, other expenses will also continue to grow with the top line. Yeah, in line with what has happened before.
Okay. Thank you so much for taking my question. Thank you.
Thank you.
Thank you. Next question is from the line of Naman Shah from Monarch Network. Please go ahead.
Hi, sir. Congratulations on the good set of numbers.
Thank you.
My first question would be the growth capex for the existing parks. What would be the growth capex for the existing parks to attract more footfalls?
So we are spending roughly about 70 crores on maintenance capex for existing parks. 70.
Okay. And you said that you are coming up with a new park that you're going to make an announcement this year. So will it be similar to our asset-light model thing or
We are
FTTP?
preferring that. Just depends on the, like I said, it depends on the city that we are going to get sign up. Large cities, we will do larger investments. Small cities, will do smaller investments.
Okay. Okay. That would be my set of questions. Thank you.
Yeah. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Anuj Sharma from 3M Investment Private Limited. Please go ahead.
Yeah, thank you.
Anuj, sorry to interrupt you, but your audio is not coming clearly.
Yeah, is it better now?
It's
Hello?
still the same. Can you please speak through the handset?
Yeah, I'm actually on the handset. Is it clear? Or maybe
Please go ahead.
Okay. See, in terms of Chennai Park, how different will be the ride experience versus the Bangalore or the Hyderabad Park? Will it be a completely different experience, or there will be similarity between the experiences? And the reason I'm asking is the customers might be fungible from one place to another. So would somebody who's visiting a Bangalore park again want to visit a Chennai Park?
So our park in Chennai will be different from Bangalore and Kochi and Hyderabad. As Kochi and Bangalore are different from Hyderabad and vice versa. So they're all slightly different. Chennai also will be different. It will have different rides and yeah, you can expect it to be a little different from what we've done before.
So if somebody were to put a commonality percentage, what would be the commonality between all parks in terms of ride experience?
Commonality will be about 60-70% will be common and 30-40% will be different.
Okay, all right. One more thing. We based our model earlier. We reiterated that we would want to look at Six Flags or similar models, but if we see globally, these models are under some challenge. So, can we say that we have innovated our own model, or the challenges were?
Yeah, we are not following. I mean, we like to be compared to Six Flags because that's the only other comparable player to what we are trying to do. But Six Flags is in US, and US is a very different market. They are in a very different maturity level and spending level and all that. And the customer mix is also different. Six Flags, it depends mostly on a lot of young adults and local. The local part is similar, but they more focus on young adults as against families. We are focused more on a family outing as against a young adults outing. But we have mix of everything. So yeah, it's similar, but it's also different.
All right. Thank you so much.
Thank you. Next question is from the line of Naman from Mirae Asset. Please go ahead.
Hello. Hello, am I audible?
Yes. Yeah.
Yeah, hi sir. So my first question is on your current demand trends, if you could give us some sense. I mean, website available in the public domain suggests website traffic seems to be down slightly on a YOY basis. So how is that playing out currently?
It's like I said, this year we're not expecting footfalls to grow too much. It's like a consolidation year for us. So it's hard to kind of predict, and also off seasons will become a little more pronounced post-COVID because immediately after COVID there was that revenge travel phenomenon. That is more or less, I mean, it's not there anymore. So people are back to their routines and they travel at specific points in time. So that will definitely create a season and off season. So that will be there, but I don't think it's like I said, we are expecting to maintain a revenue growth what we have already projected for the year.
Sure. And so could you give us some sense in terms of the Q2, the month of, say, July? Was there some higher rainfall versus last year, which could, say, have an adverse impact on demand, specifically for the quarter? That could be more one-off led?
Hard to predict how the quarter will go because we're still only, just finished July, 1 month, right? So hard to say how it will go. But so far it's looking okay. It's better than what we thought, considering all the rain and everything.
Got it. And so is it possible to share some sense what is the contribution of these not non-ticket, but these events that we're hosting, music festivals, etc.? What's the contribution of that to the top line currently?
That will be adding roughly about 8 to 10% of extra top line.
And this wouldn't be there on during pre-COVID?
Yeah, it's not there pre-COVID.
Got it. And so does the footfall number also include footfall from these events, or is that not included?
The events comes under non-ticket revenue.
Okay, so the footfall numbers would not include that.
Yeah.
Understood. Very clear. That's all from my end, and good luck.
Thank you.
Thank you. Next question is from the line of Dhiman Shah from ITI Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. Quickly, if you can give us, you have taken both ticket price and non-ticket price seems to have propelled meaningfully. But at the EBITDA level, we see not as much impact. So if you can clarify what is causing this, number one. Number two, in terms of northern states, we were to get some approvals. So could you also enlighten us as to what is the status on that, apart from the Chennai part?
See, as far as we are concerned, EBITDA is tracking, so our margin has improved and EBITDA also has improved. So I don't understand why you're saying that.
No, the average ticket price hike plus the non-ticket price hike, the way we see it, needs to have some meaningful, rundown on the EBITDA margin. They are up by far, and it's almost at a record level.
EBITDA margin also has gone up, right?
Yeah, sure. But when we see from Q1 to Q1, possibly, is there something more to read to it, or
I think, this year also the other changes into our people costs have gone up significantly this year. About 20-25% has gone up. So those kind of things will also impact a little bit the margins, because the cost of doing business is also going up, right? Especially after COVID, with the new hires and all that, the cost of hiring and retaining people is higher. So those kind of things are there. And operating expenses wise, nothing else really has changed. Only our people costs have gone up a little bit.
Sure. And what about the approval? I think Jharkhand or somewhere we had applied.
No, we are looking at Mohali in Punjab. So that also it's on in processing, and we'll let you know when there's some meeting.
And one more northern state we were looking at.
We were looking at UP also to do something in the NCR area. So that also we are awaiting some. We are awaiting some development there.
Oh, okay. And secondly, on the capex side, do you have a mix of the Chinese equipment and or is there a standardized approach over there?
We don't have Chinese equipment. I don't know where you got that information from. We either make everything.
Do we have? I'm not saying that you have. I'm just asking, do we have some mix of Chinese equipment? So our equipment is predominantly European, is it?
European or Indian?
Okay. And between, as somebody had asked previously, between different theme parks, is there one or two or three things that you sort of endeavor to differentiate? And
see, all our parks are different. If you come to our parks, you will realize that. So that we will continue to maintain. Each park is designed to its home city and the culture there, and the architecture follows that design element, and the rides are different, and depending on the spending capacity, we have more rides or less rides, and whether depending on whether it rains more or is it hot more, we design the park. So all our parks are designed differently. Of course, they are inspired by the same ethos, but the execution is slightly different, and that will continue for our future projects.
Super, super. And lastly, if you can help us, overall, when you make your budgets, what are the cornerstones that go into projecting how much growth you will possibly undergo in the short term and medium term?
We are making educated guesses like everybody else, and we feel like, the young people's propensity to spend in Indian cities is only growing, and it's growing at a very fast pace. People are more exposed. They are exposed through social media. They want more avenues for entertainment. I think COVID has also changed people's thinking about spending on themselves, spending on experiences and holidays. So that is what you're seeing as also the change in terms of people spending patterns. Also, like for example, people go less and less to a multiplex or a movie. I think some of those, there is some disruption happening there as well, right? So I think people now save and spend more for meaningful, bigger experiences, travel, and things like that. And this is the sense that I get. I mean, this is not but I see this kind of trend happening all over the world.
No, fair point. But any critical inputs that you would want to enumerate which help us, kind of boil down to a number which is as close as what you have projected?
It's hard to say that. I mean, we don't project numbers, and we just make educated guesses and say, okay, this is what we think will happen in this year, and then we plan for that. Of course, things might not work out always, but at that time we should be nimble enough to change our strategy and look at alternative strategies if something doesn't work. So that is how I look at it. It's not that we are looking at any particular number.
Okay, so there is no planned as such growth level that you jot out at the start of the year to the end of the year to achieve a stated kind of or work towards a stated.
Yeah. That's what we do.
Fair point. Thanks for answering everything.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from line of Guneet Singh from Counter Cyclical Investment Private Limited. Please go ahead. Guneet Singh, may I request you to unmute your line and go ahead with the question, please?
Hello, am I audible?
Yes.
Hello? Yeah.
Yes.
So I'm
Guneet, sorry to interrupt you, but your audio is not coming at all. May I request you to come in a better reception area, please?
Is it better now?
Yes, we can hear you. Guneet, sorry, but your voice is breaking terribly.
I'm hearing anything.
Guneet, I'll request you to join the queue again. Next question is from the line of Raj Rishi from DCPL. Please go ahead.
Yeah, hi. Any plans to increase adjacencies other than amusement parks? Like you have that hotel in one of your parks. So any focus on that?
Yeah, so we are planning to add resorts to next stop will be Hyderabad after we do Bangalore. We are expanding our resort in Bangalore right now, and then after that we will do Hyderabad.
So this would be a part of your plan, right? Each of your parks would have a hotel.
Yes. And it's always there in the master plan.
Okay. And this Bangalore hotel, what kind of expansion are you doing?
We are adding about 40 rooms. We are adding convention space. We are adding some new attractions. We are adding 2 new bars. We are going to refurbish the rooms. All that, just give it an upgrade.
Okay. And how much land is unutilized in the current 3 parks?
About half of the land is unutilized.
And you can utilize the entire thing, right?
Yes, sir.
Okay. And any plans as to how you plan to utilize it?
So like this, when we add rooms, we will use a plan. When we add rides, we will use a plan. When we add restaurants, we will use a plan. So the facility will keep growing.
Okay. And in how many years do you think you'll be able to utilize the entire land in the existing parks?
It should last us another 10-15 years easily.
Okay. Okay. Okay.
Yeah.
And this can also be a big play for weddings, etc., right? For your.
Yeah. So we are getting a lot of that kind of demand. That's why we are adding more space in the resort.
Okay. And this would be the trend in your future parks also, the same model?
Yes.
Okay.
Yes.
And okay. And sir, what's the main moat which Wonderla has? Say entry of new players, international players, etc. If they also talk with state governments on an asset-light model, say Disney or something, can you just elaborate what's your thought process on this?
See, Disney and all, we will not compete with them because they'll get it in a very different price bracket, and their investment and everything will be in a very, very different. So we don't see that as potential. In fact, if that happens, that will only grow the market because they cater to a very high-end premium kind of experience, and people who can spend about 8,000 rupees, per day per person. That's the kind of number you need to go to a business park.
Okay. So what kind of threat do you perceive from who? For your
See, we always say that our competition is not just other amusement parks. We look at all kinds of entertainment as potential competition, including digital entertainment, other holidays, any day trips, or any how people spend their days, free holidays with their friends and family. That will have a bearing on whether they want to go to an amusement park or not. But having said that, I do feel that the sector itself is very underrepresented in India. So I think there's a lot of
under what?
The sector is underrepresented in India. There are very few players in India, so there's a lot of scope for growth.
Okay. And sir, you would stick to this business area, right? Amusement park plus hospitality, etc. You would not venture into any other area.
Why did you? I mean, so anything allied to our entertainment, we will we'll keep exploring. For example, we want to look at some form of digital version of Wonderla at some point. Not maybe immediately, but soon. So anything related to entertainment and outings where we feel we are relevant as a brand, we will look into that.
Okay. Thanks a lot.
Thank you very much. As there are no further questions, I would now like to hand the conference over to Mr. Sumit Khaitan from Orient Capital for closing comments.
Yeah, thank you everyone for participating in this conference call today. I would like to thank management of Wonderla for taking out their time and answering all the questions today. We are Orient Capital, Investor Relation Advisor to Wonderla Holidays. For any queries, please feel free to reach out to us. Thank you so much.
Thank you all.
Thank you.
Good day.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.